the budget has been done for the last 3 or 4 occasions will find more support amongst bureaucrats and politicians. What's your thought?
Yeah, good morning, Shell. Well, I believe that I think the name of the game here would be the consistency and the growth. This government has demonstrated incredibly high amount of will to basically pursue the path of growth, and that's what I think one is expecting out of this budget as well. Economic survey has given couple of statements I think which are very clear as far as the intent is concerned. They want to bring the fiscal deficit back to 4.5% by FY26. So which means that interim budget which projected at 5.1% is basically being brought down in 2 years time to 4.5%. Does mean that I think they are significantly counting on higher amount of revenue on one side, and also they would probably be expanding larger amount of infrastructure projects I think which they have committed for. But in the most important statement along with that is I think they want to invite public-private partnership, which means that government is very mindful about I think stretching their financial resources. They do not want to unduly stretch the financial resources. At the same time, I think they want to invite the global capital, both in form of debt as well as in equity. And that is a reassuring statement as I see it currently. So in my viewpoint, I think the allocation of money as a priority would go towards infrastructure, where about I think 12.5 crore kind of a budget allocation would take place from interim budget of around 11.1 lakh crore. And at the same time, I think the PLI-based manufacturing for Make in India program at the same time should be, I think, be given the larger preference with newer industrial segment, I think, getting included to PLI, including the chip manufacturing, among others. So I think to a greater extent, we believe that I think the spending on infrastructure, spending on manufacturing, and spending on agriculture largely to create high amount of I think dependency on the food security business. So there the program is likely to be on the agriculture side. So we are clear about I think the job creation also simultaneously due to all these three focus areas.
Okay, 60 points higher on the Nifty, and infra is in top shape. Ultratech up 1.5%, Tata Steel up 1.2%, NTPC 1.2%, PPCL adding about a percentage point. Sakshi is with us. Good morning.
Good morning, Shell. You know, I was there, and good morning to Devin Bhai and also Manish joining right in. Warm welcome to both of you yet again. I was at the India Today studio since 7 a.m. and you know they had this tagline that they were flashing: Naukri, Nifty and Nation. That is what they expect the budget to really focus on. And I want to understand from you, Devin Bhai, Naukri, Nation, Nifty, क्या चलेगा इस बार के बजट के बाद?
तीनों तीन चलेंगे, उसके अंदर कोई चिंता करने का जरूरत नहीं है, क्योंकि जैसे अभी हम बात कर रहे थे कि the amount of job creation which is basically expected out of all the three programs which the government has possibly emphasized on, be it agriculture, be it infrastructure, be it manufacturing. In each of the three programs, I think the underlying assumption is that the government will end up creating the larger amount of jobs, which is also being emphasized in the survey yesterday. So I think from a perspective of I think looking at the budget as a balanced one, I believe that it will lay down the path for next 5 years easily, which would possibly be continuing on the program that they have already announced. But at the same time, they are expected to increase the PLI bandwidth to a greater extent, I think including some other sectors in allocation of money therein. So that is one area which I believe going to be taking the prominent move from the government side. As far as I think the Nifty is concerned, Nifty is a byproduct of I think the government's economic policy and the outcome out of that. So Nifty, even though there may be some sort of correction here and there, would probably show higher path going forward in next 3.5, 4 years time, wherein one could expect that in 5 years time, I think Nifty could be doubled from current level than what it is at this point of time. So certainly, I think we are expecting both the Naukri as well as the Nifty. I guess I think both of them are probably taken care of, I think, in the course of time by the government's policies.
Right. Manish ji, let me bring you into the conversation as well. Tell me, what could be a make or break in this budget and in this budget speech for the markets, for the economy?
I don't think there is a space to do a lot of break now. at this stage. Of course, for equity markets, a disappointment could come from in the form of capital gain tax. I think there will be disappointment. But for economy at large, and I think the macro is chugging along. You got one of the best macros since early 2000s.
Yes, correct.
Less than 1% CAD, run rate of core inflation at less than 3%. Fiscal deficit. You're arguing that the any shadow fiscal deficit is negligent. PSU entities are not borrowing, so there is a lot of space almost everywhere to actually raise money. So in a sense, budget typically is a revenue versus expense, and I guess there is enough revenue flowing in to spend. And
I'll interrupt you just for 30 seconds, Manish ji. That's the finance minister showing us the Bahi Khata, the tablet in the red cover, visuals coming in from North Block outside the finance ministry right here. She's also clad in white and red with that red cover of the tablet complementing her as well. Smiles all the way. The entire team that has been behind the construction of the budget this time around. You do see key finance ministry officials right here, right behind her. All smiles and confidence displayed on their faces. You have some important people right there. CEA V. Ananta Nageshwaran. You also have the Secretary Finance, Dr. T.V. Somanathan, Secretary DEA Ajay Seth, Secretary Revenue. You also have Sanjay Malhotra, Chairman CBDT, Ravi Agarwal, Chairman CBIC, Sanjay Kumar Agarwal, all of them behind Finance Minister Nirmala Sitharaman, and the wait is only going to be much shorter now for us to really see the budget speech at 11 a.m.
Right, ladies and gentlemen, and from here the Finance Minister proceeds to the Parliament, where she'll present a concise copy of the budget proposals to her cabinet members and of course to Prime Minister Narendra Modi, and then we'll see her proceeding to the main hall of the Parliament. But till then and now, we have Mr. Manish Sonthalia joining us. He is the Chief Investment Officer at MK Investment Managers and a very long-term watcher of the markets. Good morning, Manish. A very warm welcome on Market Today. A couple of sectors you think will be benefited from the budget speech about 1.5 hours from now?
So I think a fine balancing act is required between capital expenditure and revenue expenditure. I think some measures to have some money in the hands of consumers is the need of the hour, and there'll be a lot of proposals that would be watched at primarily from a taxation point of view, because that would imply leaving some money in the hands of consumers. So some increase in the exempted tax slab would be watched out for. In terms of housing, I am expecting some big announcements, because government has actually alluded to the fact that affordable housing, which is PMAI, would get a good boost. Apart from this, capital expenditure would include your flagship expenditures in, let's say, railways, defense, infrastructure, renewables, power. These would be par the course. I mean, it's very much expected that there will be an impetus given out. But key to watch out for would be some of these sectors, basically your industrials, would be your consumption, housing, infrastructure. These would be some of the sectors to watch out for.
Right. We'll also get into the conversation with Manish Tangi also right here. Manish ji, as the markets have settled, 1 minute to go for the markets to open, all the sectors into the green. So we are going into the budget speech with a high hope right there. 0.25% uptick on the Nifty and about a 0.4% uptick on the Nifty Bank. You tell us 3 key sectors that could benefit the most from the upcoming budget, and anywhere that you could actually see, an adverse effect coming in.
So I think from a theme standpoint, I agree with Manish there that it's likely that incrementally in impulse for rural versus urban, and a proxy of that will be FMCG over discretionary. I think global cyclical slowdown outside of US has already played out significantly. I think global cyclicals such as IT would do better than local cyclicals. So my portfolios, would invariably somewhat different from say right now people who are actually thinking super India bull, because I'm watching as you said, Revex in India for last 2 years has been growing at only 4-5%, delivering very low core inflation. That typically historically has hurt margins. Now hasn't happened so far, but it is a harbinger of a possibility that eventually margins will cave in. So which is why, the places to hide in India are these, non-discretionary FMCG staples, global cyclicals and such likes, instead of sort of super local businesses like discretionary and industrials.
Okay. Sakshi, what we'll do is we'll just pay attention to the markets a bit. Remember, they're likely to be flat till the speed starts, and flat as flat can be. 58 points, a green tick on the Nifty, 24,564. Nifty Bank is up 100 points. The IT index in the green, as is the Nifty 500. Let's look at some stocks. HDFC Bank down about 4 rupees at 1638. Reliance at the moment is clicking 6 rupees higher, 3006.4. And what about Infosys in the green, about 2.6 rupees higher, 1814. It's a nice green tick. All 10 index heavyweights on the Nifty are right up there. Let's look at the ways how the most traded are tracking, and at the moment we'll try and pay attention to the PSU basket. You have RVNL clicking it up from the railway side, 1% higher, 629, 630 now. All of them are there. HAL, BHEL up about 1% each at 5,024 and 314 respectively. You have all the favorites, Sakshi. IRFC up 1.5%, Cochin Shipyard up 1%, Mazgaon up 2.6%, Railtel adding 538 at 2% higher. You have HUDCO as well, 0.5% higher. Again, ladies and gentlemen, it's going to be a PSU day. And apart from the 4 indices that we had mentioned, of the 19 we track, okay, all 19 are in the green. Let's look at what the NSE 500 is doing. 23,000 right there in front of you. Up about 0.2%. Advanced decline is fairly good. 1,400 shares in the green, 470 in the red. Coming to Manish Sonthalia. Manish, you've mentioned housing as one of your favorite sectors. Within the infrastructure space, a lot of expectations that the 11.11 lakh crore allocation that happened last year will see an augmentation. Any favorite stocks, sectors, or themes that you'd like to play out on infra?
So I think it would come to power as a major theme in the infrastructure space, which will require a lot of boost. Because if we are growing at 6.5-7%, we need energy security, and given the data center proliferation, etc., we'll be guzzling a lot of power, and probably in terms of securing that power requirement, I think a lot of impetus will be on renewables and the power space as a whole. In terms of the others, which is basically your defense and railways, it would be a continuation of what has been alluded to in the past. Allocations would be watched out for, and obviously the allocation to capital expenditure will depend a lot on what the revenue expectations are for this budget, in terms of what the real GDP plus the inflation, in terms of what the multiplier, in terms of how many times or what percentage of GDP growth will translate into revenue growth by way of taxes. That is all the maths that needs to be watched out for, and obviously one needs to keep an eye on the fiscal deficit. 5.1 is what the markets would like. Anything more than that is not warranted and would not be liked. So all this fine balancing act would be keenly watched.
Right. Let's get in Devin sir into the conversation. Devin sir, do tell us, what is on your top expectation? You may be looking at a wide sector-wide expectation, overall economy-wide. We've been discussing capex, infra outlay, everything. But what is your one topmost expectation from the budget?
Well, I think undoubtedly within the infrastructure space, there is going to be, I think, emphasis coming up more on the front of the power generation, and that too within the renewable power. The focus would be on green hydrogen because India promises to be the world capital of green hydrogen with its electrolyzer technology adoption, which I believe is going to play a key role in bringing down the cost of the power. So government's focus for 2029 is going to bring down systemically and systematically and structurally bringing down the cost of the power. So that's where I think the larger amount of allocation of money towards the green hydrogen program, which the government of India is basically wanting to carry out. And at the same time, I think the PSUs and particularly the oil PSUs are the ones who are likely to be allowed to set up their own companies or subsidiaries within them, for which I think this particular program will be carried out. So we are looking at, I think, the PLI allocation also on this particular front from the government. The second most important area where we see the distinct amount of possibility is inland waterways transport facilities, wherein I think the shipbuilding and inland water transportation is going to be given the extremely high amount of weightage. And that's where the allocation of money could increase along with, I think, the other areas which we have seen up till now. If in the previous cases, I think they had spent significant amount of time in creating the freight corridor, I think this time around it's going to be the turn for some of the inland transportation on the waterways front. That's where I think the larger allocation of money could take place. So keep watching out for a couple of these announcements as they see, I think, happening in this budget for the infrastructure segment in particular.
Okay, let's get Mr. Dangi his thoughts on the markets. Manish, a huge amount of run-up has happened, and we'll show you sectoral performances. The worst performing sector is FMCG, and even that index on a half-year basis is up 7%. Forget the rallies that we've seen on PSUs, on realty, on oil and gas, all up between 35 and 42% over the last 6 months. Now, as a stock picker, because all of us have to make money at the end of the year, where is your focus so far? You've mentioned in your document that your research team is looking at specialty chemicals, but this is something that you don't understand on your own. Nevertheless, let's hear it out in terms of stock picks.
No, I would talk stocks, but in general, my view, and there is a conflict here because, if people who watch technicals in my team, the ones who understand the micro dynamic of markets kind of see no reason to yet take a call that this is it. There is still very, very buoyancy that they can spot in the market in terms of volumes and the way vols are. And the way, I have to admit, and they themselves say that, the breadth has been reducing underneath, there is a turmoil in the market. And in a sense, what you invariably get from all investing teams, including mine, is the rotation that, anything that hasn't done well in last few months would potentially do well. Primarily, this happens, Chief, when there is a flood of money coming in and you're literally, as a fund manager or analyst, looking for a next opportunity, which you actually don't get in absolute terms, but invariably find that, okay, something that hasn't done well will eventually catch up. And this is how the chemical business also is being spotted by my team. Of course, last few years, pretty much like some of these private banks, IT, not done well. And, likely that there could be a mean reversion in terms of performance because rest of the sectors, most of the market otherwise are sort of super overheated. So it's a mean reversion trade.
Yeah.
I personally, as I said, I like global cyclicals and I like defensives in India, and FMCG happens to be one of it, which will actually at least defend well in case there were to be an Indian cyclical slowdown over next 6 to 12 months.
Okay, so the mosaic of the market, ladies and gentlemen, is in a shade of deep green, and that's simply because the monthly FII numbers, the very strong inflows of SIPs, ultra HNIs, HNIs and retailers hunting on a minute-by-minute basis to punt on markets. Now there is a crisis. We have two Manishas on the screen, so I'll stick to surnames. Coming to you, Mr. Sonthalia. You've been a stock picker. We've been speaking to each other for the last 3 decades or so. and you've created enough and more wealth for all your unit holders and PMS customers. Where is your sight and what is on your radar?
I think one space which is quite overlooked and I think is not yet priced in, is the housing space. It has gone through some correction, and I think this year, housing as a theme would be performing, and all aspects of housing, whether it be finance, housing finance, whether it be cement, whether it be tiles, plyboards, paints, etc. I mean, you can take your picks in each of these spaces, but I think this is one theme that needs quite a bit of watching. And the second is basically your BFSI. I think there will be some announcement when it comes to the problem of deposit mobilization, ATC deduction, etc., which was taken away, might come back because the sector is grappling with shortage of deposit, and of course it's quite an undervalued sector, so to speak. If India has to grow at 6-7% for the next 5 years, you can't imagine that if there's not smooth flow of credit through banks, and if LDRs are a constant concern, then those targets would be quite difficult. So from that point of view, I think banking and housing, these would be the two themes that I would be watching out in the budget very, very closely. Rest of the sector, there will be allocations, but capital goods, defense, railway, they are priced to perfection for the next 5 years of earnings, I would believe.
Okay, I'm going to continue with my gentle coaxing to get both Manish's, Mr. Dangi and Mr. Sonthalia to come up with stock ideas. But meantime, we'll have Sakshi on the main screen. And ladies and gentlemen, there's going to be a plethora of data that Business Today Television has prepared for you before the budget comes online. And there she goes.
Absolutely, Shell. A whole host of numbers that we'll be watching out for in the budget speech. Of course, the first one will be on the growth figure, on the GDP factor. Already in the economic survey, a 6.5 to 7% expectation has been set. But if we look at the kind of figures that we are looking at on the GDP front, I will just show you on the budget dashboard that we prepared for all our viewers. You remember from the time of COVID-19 when the GDP had crashed, we've actually seen a stable economy emerging over the last few years. We are at a stable footing at 6.8%. Remember, we got that big, bonanza figure of 8.2% for FY24. Now the expectations are set for 6.5 to 7 odd percent. But the big question right now is that this growth in the economy, the big criticism that the government has been facing is that it is unequal. You do see a K-shaped recovery that's been happening, and that is one thing that the government really needs to address, whether this will be an inclusive growth that they will actually propel with the upcoming budget. The second important figure that we are going to be looking at is also from the inflationary aspect as well. Remember, inflation has been sticky. Food inflation is something that is worrying the government at this point in time. They really need to come out with the agri reforms, something that can improve the agri infrastructure, the warehouse facilities, the storage facilities, the way the climate change is impacting harvest season, unseasonal rainfalls. That is something the government will really have to take note of. And because you've been seeing that the inflation has been inching down, can it cool off further is something that we'll be watching out for. Again, the government is very, very comfortable as far as the tax figures are concerned. Both on the direct side, there has been a comfortable inching from last FY21 to almost FY25 estimated. Look at the 22 lakh crore rupees odd that is expected in the upcoming budget as well. We are already at 20 lakh crore rupees, both on the direct as well as the indirect side. These tax collections are pretty buoyant as of now. The tax to GDP ratio also shows a continued stability at around 11.7. The big question is, what will the government really do of this revenue collection, of this tax collection now? Will they deploy it meaningfully back into the economy, get the ball rolling and get the economy back on the glide path as far as the growth is concerned, Shell?
That, ladies and gentlemen, was the pictorial representation of what you might just see discussed in the forthcoming budget speech. Let's head back to the market. Flat as flat can be. Nifty up just 16 points. 10 points up on the Nifty 500. The bank is doing 64 points higher, and I'd just like to mention 4 stocks that have hit record highs. Federal Bank, ladies and gentlemen, 2.8% higher, 198.3. Godrej Consumer Products, 1474, 0.5% higher. The general insurance space is lit up by ICICI GI, 1904, up 0.5%. And from the specialty chemical space, we have PI Industries, 3994, up about 0.3%. Mr. Dangi, coming to you. This wonderful article of faith that retailers have put into the government as also the stock market is this SIP number now touching 21,000 crore rupees a month. Do you see this accelerating, and do you at the same point of time see this as keeping valuations frothy and fund managers such as you on their toes to pick up outperforming stocks?
This is the inertia. This is the momentum that market has right now. Investors have figured out a place to make the decent amount of wealth, and therefore it will continue. The way to assess whether it will continue or not is whether policymakers would respond against it. So see, look, it has come to a point where RBI, SEBI, even FinMin officers, yesterday Anand made this points that, look, we need banking deposits also to grow because it's an important source of capital. Now, I do not agree with this that capital markets and banking actually compete, because principally all the money in the capital market still sort of go, spill back into the banking, and therefore the deposit creation or deposit growth has got nothing to do with high SIP numbers. But be that as it may, the reality is that today the entire policy ecosystem is telling you that there is something excessive happening right now and must be sort of tamed. Now it's likely going to happen in the form of doing something to break the FNO bubble, but all you know is that some other measures are also taken, because I think there is a bit of a discomfort here.
Otherwise.
Right. Mr. Sonthalia, let me come to you now. I want to really understand, there is an argument going on that whether the government, which has now more money in its hands thanks to the collections on the taxes front from forex reserves or from the RBI, how should the government be really using this? Should one really look at a complete reduction on the fiscal deficit part? Will that make the markets more happy? Or should this money be deployed to spur consumption that has been faltering as of now? Where do you think the markets will be happiest, and how the money is deployed on this front, sir?
Markets would definitely be happy if the fiscal deficit target for FY25 is kept at 5.1%. Obviously, government has to do a fine balancing act between revenue and capital expenditure. Markets won't be pleased if the numbers go beyond 6, and that was the last year's figure. But I don't think there is any requirement for that sort of fiscal deficit to be maintained. We are in good times, and I think the government should use that opportunity to bring down fiscal deficit targets in line with the FRBM Act. In that backdrop, I think some leeway in terms of relaxation of taxes for the middle class would definitely help and cheer the markets, because there will be more spending that would happen. Consumption does require some boost. The rural folk, the middle class, the urban middle class are all reeling under the yoke of inflation as well as high taxes. So some leeway out there would be very, very helpful from a sentiment point of view. And at the same time, I think to propel capital formation, the momentum, as has been seen in the economic survey, capital formation at 9% incremental last year was very good, and I think that momentum needs to be maintained. How the government is going to balance disinvestment, because there have been some statements that we are not looking at disinvestment, no need to form targets because you really don't collect anything. So I think that is another space that would be needed to watch. Non-revenue receipts, which is basically a capital receipt. How the government is going to fund non-revenue receipts. So I think this is where the entire focus would be. And in this whole backdrop, some announcements on housing would also definitely help.
Right. We'll also get in Mr. Dangi into the conversation now. A big thing on everybody's mind right now is whether there could be any tinkering of taxes on capital gains front or on F&O, something that has been spelled out by the SEBI chairperson and yesterday in the economic survey as well. Do you expect to see some tinkering on that fact? And in case something of that sort comes, how will the markets react to it?
So I'll be surprised if nothing is there. It's just that, these two are conflicting choices, doing capital gain tax as well as FNO. So I guess if the primary function is to sort of tame the speculative activity, given the fact that near 90-95% of the people end up losing money in those trades, unskilled that they are in this craft, I guess something ought to be there. And then that does not sit really well with higher capital gain tax. So I guess if something will be there, more likely towards FNO. It may very well be handled by SEBI, and a general sort of a remark could be there from Finance Ministry as well as an instruction. But I would be very surprised over the next 3 months, significant measures of policies are not rolled out to tame the FNO activity in India.
At that point, Sakshi, at this point of time, we are the largest derivatives market in the world.
Yeah.
Even though the comparison between Indian stock markets and Wall Street is David versus Goliath, but that's the frenetic level of options activity that we are seeing in India. Staying with you, Mr. Dangi, one question that I have in mind is at the opposite ends of the spectrum. What are you not looking at in terms of creating value for your unit holders in the PMS scheme? And what are you looking at in terms of sectors where you are busy picking stocks?
Listen, as I said, at this stage, last time also we discussed, the most profitable trade in town is actually low inflation, low nominal GDP, and therefore low rates. And so it's very likely, in my view, that a long bond in India over the next 2 years would perform somewhat close or better than Nifty. That's my big picture view. Basically, a 10-year bond at 7% once bought, and if the rates head to 6% or below, which I think they will, in fact, they may head to 5.5%, you will end up earning 10-12%, and you're not going to earn more than that in Nifty. Second, I think that Indian balance sheet is a better place to bet on instead of Indian P&L. So corporate margins are at multi-year high. They will very likely sort of go down from here, and therefore there will be disappointment on that. But on the P&L side, but I think the balance sheets are so strong and they take a lot longer to decay. So a credit is a better way to play corporate balance sheets than corporate than balance sheets. So therefore, you can invest in credit portfolios. Sectors we've already discussed, so I won't repeat them.
Oh.
Okay, that, Mr. Dangi, is enough fodder for the next interview that we'll be doing for you. Thank you so much for your time, and it's been an excellent 45 minutes understanding the best macro ever, and of course, how to play it in the markets. We now welcome Mr. Mahesh Patil, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Good morning to you, Mahesh, and a very warm welcome.
Yeah.
Your first and two major expectations on the macro side as far as the forthcoming budget speech is concerned. How do you feel?
Yeah. Good morning. Morning. I think today is the big day again, as the market expects. So I think in this budget, as what we saw in the interim budget, I think clearly, I think the path towards fiscal consolidation, I think that is clearly on the way. We don't see any deviation from that. Okay, I think that will continue. At the same time, I think we've seen the last 2-3 years, right, post the pandemic, the focus has been in terms of trying to stimulate the investment, trying to address, okay, the supply side, okay, of the market, because we had inflation also, okay, which was a big concern earlier. Now, inflation is thankfully under control. Okay, we're seeing macro stability. I think this is the time where the government could try to stimulate on the demand side. And we've seen that while the economy recovery has been good and the overall GDP growth, for last year was healthy, and this year also we expect around 6.5% kind of a GDP growth. There are a few pockets in the economy which are still yet to recover, and primarily on the consumption side, which is still lagging probably the pre-COVID trend which was there, while investments has caught up with the pre-COVID trajectory. So we could see the government trying to stimulate one is the consumption, especially at the bottom of the pyramid, right? In terms of some kind of tax cuts, which could be there. Also, the rural economy has been recovering slowly.